and I'm going to keep talking about this because this is an important issue. And you know, last week I said China dumped $50 billion in US Treasuries. They keep doing it and buying gold. Why are they doing that? So I guess the Chinese are not believing in the IOUs that we're sending them constantly. And, they're accumulating gold. They're accumulating hard assets. They must not think inflation is over, because why would you accumulate gold as an inflation hedge if you think inflation is dead? And why are you selling your treasuries, right? Well, they're selling the treasuries to retaliate probably to our sanctions that we put on their EV manufacturers and solar panel manufacturers. But China used to be the largest holder of the U.S. treasuries at 1.4 trillion. Now they're down to about 750 billion. We talked about the deficit. The deficit is taken care of by issuing IOUs around the globe, right? And so they keep reducing, and this is on the right-hand screenshot. You guys see the chart. They keep reducing the holdings of their treasury securities, and they're going to keep doing it. Now, the problem that creates is this, okay, for the Fed. If the fiscal policy in Washington was correct, and we weren't creating $1 trillion, or adding $1 trillion every 100 days to our deficit, 1 trillion, people, think about this. The only way they can get financed, the deficit, is by issuing IOUs, treasury bonds, notes, 2 years, 10-year, 30-year, short-term bills, which the Fed has to constantly issue. Well, for when they issue those, somebody has to be the buyer of these goods, these IOUs. So China is selling it. China doesn't want dollar-denominated bonds anymore. They're investing in gold. Okay. So who's going to buy it? If your largest bondholder is selling, so they're not interested in buying. Because what they have figured is that, so imagine this. I'm Chinese government. I have a massive trade deficit with the U.S., close to $500 billion a year after year. So what do? I take the money and I buy U.S. treasuries. So I own, the IOUs. But most of these treasuries are long-term. They're 30 years, 20 years, 30 years long, right? You have to hold them to maturity, because when interest rates fluctuate, these bonds in nominal value will fluctuate as well. So, but what is happening is that we've been pumping so much money that the value of that fiat currency that they're holding, which is in US treasuries, by the time the maturity comes in 30 years, each bond is $1,000, right? And every year that dollar is losing about 5 to 7% of its value, okay? So take 5 to 7% a year of loss in fiat currency value, and the maturity comes in 30 years, basically that bond is worthless, right? You're getting something. You're getting $1,000 per each bond that you bought, but then what you can buy that day, the buying power of that is useless. It's nothing. So China figured this out, saying that, hold on a second, these people are not putting their house in order. They're not. They have a fiscal policy that is absolutely garbage, and then the monetary policy has to follow the fiscal policy. So they're not buyers. Okay, who are we going to sell them to? To the U.S. corporate, right, and to around the world. I mean, Japanese right now are the largest, actually, U.S. Treasury holdings on the planet, about 1.3 trillion, if I'm not mistaken, and other countries, right? But we have to finance budget deficit of $1.5 trillion every single year. So we have to issue another $1.5 trillion of IOUs. Somebody has to buy these. Are the Saudis? Is it the only reason we can do this, by the way, is because the dollar is still considered the world currency, right? I'm not going to say the chosen currency. The Chinese don't think so. They're replacing their dollars with gold. That's the reserve currency of the world, right? And until that changes, if that changes, watch out. We're in huge trouble. But is it going to change? Probably not. So this gentleman actually hit the nail on the head on this problem. The problem is the Fed is out of market right now. So meaning there is a QE and QT. QE is quantitative easing, which is what they did during the pandemic. And it happens by the Federal Reserve lowering their balance sheet, which was up to $9 trillion, and now it's down to probably $7.5 trillion. So they're not the buyer of these bonds either. So who is buying these bonds? They have to issue these, right? Okay. So here's the problem. The central bank is allowing treasuries to roll off its balance sheet with a quantitative tightening, which I've talked about. So if the biggest player in the domestic treasury market, which is the Federal Reserve, and the second largest player in the foreign treasury market are selling bonds, which is treasuries actually, the only way they can reduce the balance sheet is by selling bonds, getting rid of their bonds or whatever, mortgage-backed securities, whatever they're holding. So they're sellers. Chinese are sellers, right? Who's buying these? Somebody has to buy it. Well, in order for them to be able to buy this, right, you have to appease the investor that's going to put their money into this. So that means you may have to offer higher interest rates to make it attractive, because inflation is eating into this every single year, right? So, I mean, this is a great point here. He raises a great point. So one of the reasons Treasury yields continue to climb, although they're coming down now a little bit for the past week, despite hopes of a Federal Reserve rate cut. Well, the reason for that is the buyers of these bonds are requiring higher returns on their money. When they're going to give you the money on an IOU, they go, what is the bond today? It's 450. I'm like, no, I want 470. So the auction goes at 470. So that's the Fed's, catch 22 here. They need to sell these bonds, but then the buyers are requiring higher rates, right? So China's treasury dump underscores a big problem for the US Treasury. I agree. The federal government is running massive deficits month after month. Absolutely true. If China and other countries spurn US debt, meaning they don't want any more US debt, who's going to fund this borrowing spree? Great question. Federal Reserve, Janet Yellen, they're all talking about it. They're worried about the 34 trillion budget deficit. Talk is going around that this cannot go on because the buyers are stepping away. They don't want dollar denominated assets because we keep printing and then we keep issuing bonds and we're devaluing our currency and created the inflation and genie as it is. So foreign investors make up about 1/3 of the market for US Treasuries. Okay. You could argue that it's still plenty of capacity in the domestic market. Yes, who's the domestic market, right? Pension plans, 401ks, corporates, obviously, corporations buy these bonds, right, for their own treasuries, unlike Michael Saylor, who's buying Bitcoin. Um, you know, um, I mean, there's like CalPERS pension plan is $1.5 trillion, right? So they need to constantly, obviously, shuffle the return by buying U.S. Treasury bonds in their portfolios. But at some point, this musical chairs that we're playing is going to end, and when it ends, it's going to end super badly. I'm not being negative. I'm just giving you guys my opinion of what's happening. And so yeah, Chinese keep selling bonds and buying gold. I don't know, if Chinese don't think inflation is over, the segment before we talked about soft landing, inflation is going down with low unemployment rate. I don't know. Maybe Chinese don't know what they're doing.